When private lenders are lending on commercial mortgages, they're more concerned the value. The value is a main criteria for them. Yes, they do look at the mix of tenants, and yes, they do look at the servicing. You know, what are the rents? What is the income? What are the expenses? Overall, you know, the value and private lenders like to stay. They like to be at around 65. They'll still go up to about 75, but usually they don't like to do more than that. With a private lender, again, the value is the key, the major component of assessing whether they're going to do the deal or not. Where banks, you know, yes, they'll take the value, but they'll also look at the other things, and they're almost equally important to a bank. Who are the tenants? Are they AAA tenants? Are they A tenants? What are the terms of the lease? You know, the 3-year, 5-year, 1 year. I mean, that makes a difference. And what is the serviceability? What is the rent? And not only do they want it to cover, and I'm talking about a bank, not only do they want it to cover, but quite often they want it to cover and show a profit of, you know, 20%, 30%, 25%, depending on what kind of a product it is. Even though it's commercial, that also can vary. So again, a private lender mostly focused on value, asset lending. Private lending, private mortgages for commercial property are good in some situations where banks really don't want to lend. For instance, maybe it's a single-use property. Sometimes the commercial property may be older. If a bank is looking at an application on you know, a number of stores and apartments that may be 75, 85 years old, quite often, you know, they'll turn that loan down. They'll also look at closings, for instance. If a bank is looking at a closing date that is within, you know, a couple of weeks, they're not even going to want to do the application on the deal. For a bank to close the deal, they probably need 2 to 3 months. So a quick closing is another time when you want to look at private financing. For commercial financing, private lending is not really that much more expensive. When you're applying for a commercial mortgage at a bank or a trust company, there's always going to be fees. So there are fees, and so with private lending, there are fees. Private lending may be a bit more, but not a lot more. When it comes to rate, sometimes private lending can even be competitive with rates with commercial lenders. Or at other times it may be a bit higher, but it's not a lot higher. And the advantages of private financing sometimes can outweigh that little bit of rate or a bit of a higher fee that's charged. You know, their application process, the deals that they'll do that a bank won't do. Just the ease of the application and getting the loan and getting the terms and conditions quick sometimes make up for that. And yes, you know, maybe private lending, although one thing, you know, usually they like to do 1 or 2 year mortgages, but sometimes that works out really well because, for instance, you may have, let's say, a plaza that is not 100% leased. Well, you take a private mortgage for a year, and then you have that year to get the rest of the leases in place, and then we can look at doing institutional, maybe bank financing. Most private lending for commercial mortgages is a year. There are times where a lender will go 2, more often 2, but to try to go more than 2 is tough. They like to stay, private lenders generally like to stay in the 1 or 2 year range for lending. If you need more information, give me a call or send me an email. Take care.